Welcome back to the podcast, everyone, from First Hope Bank. My name is Andrew Sommerfeld. I'm the host of our podcast here. And today I am joined by Stacy Fauerbach. Make sure I got that. I nailed that, I think.
Yes, you did.
Excellent. Wonderful. Stacy is the residential lending leader here at First Hope Bank, and we're going to talk all things credit score today. But before we dive into the questions, Stacy, would you just mind introducing yourself for our listeners? Just a little bit around and something like that. That would be perfect.
Sure. So, um, again, Stacy, I've been with the bank for 27 years. Most of my tenure at the bank has been in lending. So I do have a background. I was a loan officer. Processor, underwriter, and now I lead the lending team. So my knowledge is widespread of where I've been at the bank and in the lending department. So credit is one of the hot topics here today. So yeah, I think we'll get right into it.
Wonderful. That sounds great. Let's do that. So, question number one. For all of your experience working with consumers over the years, what's the biggest misunderstanding people have about credit, their credit scores, and how that actually affects their whole financial life?
So I think what people don't really fully understand is that your credit report really plays a role in just about everything you do when it comes time to maybe like growing up, so to speak. So, buying a house, you need to have a credit report or credit score for that.
Uh-huh.
Buying a car, renting an apartment, opening a credit card. I mean, it could be even getting a job. Like some jobs, will run credit to see, your background, your history. Um, so think of your credit profile as like a blueprint of your spending and buying power. What you build in your credit over time will result in what you can do, what you can buy, buying your first home, and some of those big investments in your life that you're going to come into when you start making some of those big investments.
Excellent. No, it's fascinating how kind of pervasive your credit report and credit score are to your whole financial life. Um,
Yes.
here's a follow up question to that. So when should someone start paying attention to their credit report and their credit score? Um,
I mean,
when does that all start?
the sooner that you can start paying attention to it, the better. Some
Uh-huh.
of some things about your credit is when you first start looking at your credit, it's not an immediate. So, like when you pull your credit report, you may not have a credit score at all, or you have no credit history. So, the sooner that you can start building on that, creating or obtaining credit, the better it will be in the long term because credit doesn't, like I said, happen overnight. It actually happens over a long period of time. So you have to build on that credit. So the sooner you can start, the better it is.
This is not a your credit. Let's say your credit score in particular is not a permanent thing. It can that can change over time, and there's a lot of things that um, can
Yeah.
impact that score, I assume.
Yeah, so your credit score is a moving target, so to speak. So your anything that you do to your credit, like if you purchase a car or you use some of your credit on a credit limit, that can all have an impact on your score, and it can be from like a week to week period, a month to month period, or even like a longer period of time, like even over the
Mhm.
course of a year or more. So building your credit is something that you should always be looking at. You should always be paying attention to your credit report, looking at your score, and trying to always improve upon that. always. Like it's never like an ending story. It's never like, oh, I've reached my credit target, like I've got my best
Right,
credit
right.
score I think I'm gonna get, and then just stopping. It's you should always be continuing to improve your credit.
Like not like hitting a high score on a video game, it's
Yeah.
always you're not on a leaderboard somewhere. It fluctuates. So
Right,
that's
right.
great. So knowing that it changes over time, let's break down what actually goes into that credit score. So a lot of people hear they hear a lot of these terms floated out there: payment history, credit utilization, credit mix, and it starts to get overwhelming very quickly.
Yeah.
So maybe can you break down in simple terms what actually makes up the credit score and why those different things are important?
Sure. Sure. So to kind of break it down simplistically, I kind of always like to refer to credit in like a pie chart, so to speak. So your pie chart has sections of a pie, and some of those sections have more weighting than others. And your credit score is based off of that as well. So 35% of that pie chart would is applied to payment history. So how you're making your payments. Are you making your payments on time? 30% of it goes to the amount owed versus credit limit. So again, you have a revolving credit card, you have a $10,000 credit limit, and then the amount that you owe against that credit limit is the amount owed versus credit limit ratio. You have 15%, which is allotted toward your length of credit history. So we were talking before about, it's never too early to start, paying
Uh,
attention to your credit. 15% of that weighting is how long you've maintained credit and good credit over a period of time. So that does play a significant role in building your credit score. And then the last two categories are each 10%, which is new credit, like how often you're establishing credit. And then the last is your credit mix. So credit mix is, how many types of credit do you have? Installment loans, mortgages, student loans, auto loans, credit cards. So having an array of different types of credit creates a credit mix, and actually that is looked at favorably because it shows your ability to manage different types of debt.
The pie analogy is very helpful to kind of visualize all of that. So so one thing that I hear and I read a lot about are because we talk about the length of credit history. So starting establishing good credit early and keeping that because I hear a lot of people talk about, "Well, I'm going to close all my credit cards,"
Oh,
and
that's a big
right.
no-no. That's a big no-no.
Okay, okay, but people think that because they've got all this open credit, that's a bad thing. So how do you so what's the how do we dispel that myth? What's the reality?
Okay, so yes, everybody thinks like, "Oh, I'm getting ready to buy my home. I want to clean up my credit. I'm going to pay off all my credit and I'm going to close out all of my accounts." That is one of the worst things that you can do when whenever you're looking to make a big investment or just a simple impact of on your credit report. Closing accounts, you're taking away the credit history that you've built over time by closing those accounts. So, like we talked about in the pie chart, 15% of your credit rating is built on the length of credit history, and you just closed out your accounts. Another factor that we talked about on the pie chart is the amount owed versus credit limit. So let's say you had three credit cards with a combined credit limit of $30,000. And let's say you didn't owe anything on them, but you were just going to close them out because you wanted to, show a lender that, you were managing your debt and you didn't want to have any debt. Well, you just took out 30% of your pie because that
Ooh,
pie is the amount owed versus your credit limit. So you just wipe
right.
that out by closing accounts out because you just lost your credit limit of $30,000. So when I say like
Ouch.
the factors that were impacted by that, you're looking at 30% for the amount owed credit limit factor, 15% for the credit history length. Um, you've really done some damage probably to your score at that point. So it's never ever recommended on closing accounts. I highly recommend maintaining your accounts and paying them down
Hmm.
to zero or as close to zero as you can, but never ever close accounts, especially accounts that you've built history over years of time.
That's really good to know. So let's talk about some of the other. Let's do some more myth busting.
Okay.
That's one of that's one of the myths that we've dispelled. So don't close open credit. Leave it. Leave if you've got open credit, leave it there. Um,
Yep.
and it helps for your whole credit balance and your credit history. So it impacts a big pieces of the pie. Um, Now checking your credit report, checking your credit score,
Mhm.
um, is that bad? Does that impact your credit, or what
Um,
does checking your credit score do?
So actually checking your credit score and your credit report is a good thing. So
Hmm.
you're actually entitled to checking your credit report at each of the three main credit bureaus once a year. Um, so that's something you can do and you should be doing. One, it helps to look on your credit to see if there's any fraud happening, if you have any accounts that were open that don't belong to you. Two, it helps to see if you have any negative credit that you weren't aware of, um, that may have posted to your credit report. So it's always a good idea to be active with your credit report and your credit score. And it's never a bad thing to check your credit. I would refrain from trying to check it every single month because, one, you might not get a good picture that way, but two, you're
Hmm.
really entitled to once a year with each of the bureaus. So if you do that once, with Equifax, TransUnion, Experian, you'll definitely be good there.
Good to know. I know there's a lot of services that will help give you alerts for your credit score and things like
Hmm.
that, so you can um, if you're if you're like me and you're obsessive about those things, sometimes maybe I mind too much, perhaps. Um, it goes back to my days of playing video games. I want the high score.
Yes.
Um,
Yes.
so um, so here's another question. So you talked about this a little bit, but let's be very clear. Do you have to be debt free to have a good credit score?
Um, no. I mean, like I said, being debt free is not always the best thing. It's about how you're managing the debt that you have. So revolving accounts, your credit card accounts, you have a specific credit limit. You want to maintain your spending limit against those credit limits, at or under 30%. Like that's kind of the rule of thumb. So
Got it.
you have a
Okay.
$10,000 credit limit, you really don't want to have a balance over 3,000 on that account. Not to say that you can't use your credit, like if you have to go and make a big purchase, and it's going to be over that 30% mark on that credit card, that's not going to be a
Hmm.
terrible thing. What's not going to be favorable is if you don't pay off that balance sooner rather than later. So it can start negatively impacting you when you carry high balances on credit cards that are too close to the credit limit month after month after month. So that does take, some time to impact your credit score. So it's a matter of using your credit wisely and paying it back or off each month.
Got it. That's really helpful to know. Excellent. So we've done some myth busting. So now let's get into the fun topic of those that may have less than stellar credit scores.
Mhm.
Um, so So someone here listening to this podcast, they want to improve their credit score, don't necessarily know where to start. What are some realistic habits or even just small changes that they can make that will have a meaningful difference
Okay.
over time and help improve that score?
So I would have to say that the first thing that anybody who's looking to improve their credit score or credit report, the first thing they should do is get a copy of their credit report. Like that's the very first thing. Like seeing what's out there, what I have to start with or what I have to start working with. The second thing is just making changes, lifestyle changes. It could be as small as creating a monthly budget for yourself. Like I know some people like they maybe don't have a budget. Like that's very important, especially if you're trying to maintain or establish credit is having a budget that you can work with every month. Um, Making lifestyle changes. I think one that I've kind of always used is like if you're used to going to Dunkin' or Starbucks and getting your morning coffee every day, and you are that's a small fraction, you think $5 to $7 every day. That $5 to $7 can add up. Make your coffee at home.
Oh,
Just making a
I've done
small change like
Stacy.
that.
I've 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 done the math, and
Yes, it's a lot,
it is
right?
frightening. It is frightening, and that is now why I won't mention the brand. I have a coffee maker at home now because
Yes.
I literally sat down, did the math, and was aghast at how much I was spending at
Spending on
Starbucks
yes, yes,
on a monthly basis. So
yes,
I completely agree with you on that one for sure.
yes. So,
Um,
um, I think
yes.
that's like making small changes like that where
Hmm.
it's small, but when like you said, when you look at it over time, like how much money you can save by making that one small change. And if you look at other things like that in your life where you can make a small change that will impact how you can save, how you can, maybe pay off debt. Another thing, and I think we talked about this also too, is building onto your credit. So again, like getting your credit report, looking at it, um, building on what you already have. So let's say you have a small credit card that you've had for 3, 4 years, but you don't really use it. Um, again, I never like to recommend that people use credit, but in order for that credit to really have an impact on your credit report and credit score, using it, once a month, maybe, you have to get gas. Go use your card and then pay it back right away. Using that account is now making it as a like line on your credit report that's picking up current activity.
Right.
So that's actually going to impact you positively. Um, Another thing is, if you're just starting out with credit and say you only have a credit card and no other types of credit, again, we talked about having a credit mix. Are you looking to buy a car soon or, um, you know, any other type of installment loan. Again,
Hmm.
that's kind of
Hmm.
creating that credit mix where, you'll have a credit card and now an installment loan. So building on those little blocks to, over time can improve and build that pie chart that we talked about in a more favorable
Right.
manner.
Absolutely. That's great. How long how long does it usually take to start seeing the impact of these things on your credit score?
Um, I would say it's hard to say really because it all depends on because there's so many factors that go into it. So like there's
Right.
the pie factor and then it's not even just that, it's like how you're using the credit, how you're paying back
Mhm.
the credit. So I would say if you start making small changes now, you should really realistically start seeing a positive favorable change within several months on your credit score, like maybe 6 months. The longer you go out though with credit history, the more it's going to improve your score over time. Like so, in mortgages, when we're looking at credit reports for a mortgage,
Oh,
we're really looking to see that you have established credit for at least three trade lines, um, and looking to see that a credit has been established over a 2-year period of time. Not to say that we wouldn't be able to do something if it was less than that, but that's like a general rule of thumb, like in
got it.
looking at like, okay, we can realistically see that this person has some established credit and they've had the established credit over 2 years, and I can see their trends of how they're paying back and borrowing against that credit.
Excellent. So now let's talk about a negative thing potentially. What
Okay.
should people do if they find an error on their credit report?
So if they find an error on their credit report, maybe that it's an account that's not theirs, I recommend reaching directly out to the credit bureaus to get that resolved. So it's not something that I would be able to resolve because it's on your individual credit. Like I can help you and guide you to make those changes or get in touch with the credit bureaus that you need to get that resolved. If there's a negative item on your credit report, let's say like you have a collection account. I'll use this as an example because we've had this in the past too. Um, Collection accounts are negative. It's a negative debt. Um, any way you look at it, it's a negative debt. So we've had people that like you'll have a medical collection show up on your credit report, or I've seen like utility bills from like a past apartment that you rented 5 years ago. For some
Oh
reason,
my.
yeah, a hundred
Yeah.
dollar utility bill shows up. So
Oh boy.
what to do with those? I would always recommend that you speak to uh, your mortgage loan, your lender, your mortgage loan officer, and kind of give you guidance because each type of collection account and depending on the dollar amount will play a role in what our recommendation might be. Um, and I'll use the example of the collection account that was for $100 utility bill from 5 years ago in my sample in explaining this to you. So that collection account, it's a negative account. And if you go and pay that $100 collection account off, a negative that was reporting on your credit report that was already 5 years old, you now just brought that to a current event by paying off that $100 because you made a change to that collection account. So something that was maybe not impacting your score so much because it was from 5 years ago now was brought current and it's still a negative trade line. So that could negatively impact your score. In that
Oh my goodness.
instance, my recommendation would be leave it alone. Now, that's not
Got
gonna
it.
be that's not gonna be always the recommendation I would give on
Sure.
in every situation like that, because
Right.
there are certain situations where a collection account, let's say it has a $2,500 balance, you might have to pay that off in order to get the loan. So there's varying reasons. And that's why I'm always saying, like, speak with your loan officer, like, sit down with them. Like, if you get your credit report and you ever, want somebody or some guidance, we're always there to help. Like, it's not just about, getting a mortgage for you or giving you a loan. We're there to guide you and make the best decisions for your financial success moving forward. So it's always better to have conversations when you're not sure.
That's a really great point. Let's say I'm thinking about maybe buying a home in the next 6 months to a year, let's say,
Mhm.
and I pull my credit report. I see something like that on it that's negative. Um, before making drastic changes to my credit, whether it's paying something off or closing something or whatever, it's better you say have the conversation with your mortgage lender first
Yes.
before doing anything.
Anything.
If
Yes.
you're before if you're considering buying a home, talk to them first before making any type of major change to your credit.
Yes.
That's the advice
Yes.
I'm hearing, right?
Yes, yes,
Excellent.
absolutely. Because there's so many things there's so many things that, like, that we just talked about with the collection account,
Yeah.
that we also talked about, like, closing accounts. Most people think that they're improving something because you're trying to do the right thing by paying something
Right.
off or closing something out, and
Yeah.
in reality, like, how it's impacted on your credit report is something totally different. So it's always recommended just speak to somebody, because we kind of know all the ins and outs of making your credit score and your credit report work for you. So,
So we've talked a lot about the credit report, the credit score, credit history. So let's talk about um, young adults, for first time borrowers, um, and some of the issues they run into. So how does someone build a credit score or build credit if they don't have any credit history? What's what are
okay.
some good
So,
first steps to take?
um I will say there's always somebody out there willing to give somebody credit. A lot of times it would be sometimes a store, uh, your Kohl's or whatever, like they're very willing to like set you a small credit limit to kind of get you started. If you have no like luck or success there, another option, if you have a family member that's willing to add you to one of their accounts as an authorized user, that then
Hmm.
will filter onto your credit report to kind of get you started with some
Okay.
credit that then maybe you can build on. So those
Right.
are a couple scenarios that I can say establishing credit. Another thing would be, if you're looking, like, if you have, say, $500, you can um, do what's called a cash secured loan. So we would then place a hold on the $500, and we would do like
Hmm.
a savings or CD loan against that money. So it's 100% secured, but then that account, that loan that we're giving to you would report back to your credit report. So that's
Oh,
another way
interesting.
where if you have, an extra couple $100 and you wanted to do something quick like that to kind of get your credit started, that would be an easy way to get moving on it.
Got it. That sounds better than when I was in college when they all the all the all the credit card companies were like
Had tables all
throwing
set
credit
up
cards
waiting,
at you.
yeah. Yes,
Yes, yes. Oh my God, yes.
yes.
No,
Yeah, you don't wanna go
that's really
that don't
helpful.
don't go that route, don't go that
No,
route, like,
no.
yeah.
Um, definitely not. Um, all right, so let's see. We talked we talked a lot about the credit report, how often. So at least the once a year with the free
Mhm.
credit reports, which is great. Um, where can they go to access those? Do they have to go directly to the
Uh,
reporting agencies or what's the best route to
so
access those credit
there's
reports?
Yeah, there's definitely some like online, I think there's annualcreditreport.com is one where
Hmm.
you can go and get like a copy of your credit report. Also, if you do have a credit card, a lot of the credit cards offer a free service that reports back to you uh, your credit updates, which is basically your credit report. You might not get a score with that, but they do
Right.
send you alerts and messages when like something has changed on your credit report. So I think almost all the main credit card companies do offer something like that. So that would be an easy way to kind of monitor and keep up with your credit report.
Excellent. And so we talked a little bit about um, negative things on the credit report. What if they see something incorrect on their credit report?
So incorrect, I would always say they'd have to go back to the credit bureaus to get that removed.
Got it.
And it's all going to be a matter of like them telling the credit bureaus like this is on here incorrectly, and they're going to have to provide I'm sure some type of documentation like validating it's not them, and then they would remove it for them, and that process can take like I would say 30 to 45 days. So make sure you're giving yourself time if you have an error to get that
Oh,
resolved
okay.
before looking to apply for a loan, because it does take time to remove that from your report.
Good to know. That's very, very helpful to know. Wonderful. So let's change lanes here a little bit. So now, so we've talked a lot about credit report, credit scores. So let's talk about who we are, First Hope Bank. Um, one thing that I think sets us apart, and hopefully you would agree, is the relationship aspect um, to working with our communities that we're a part of.
Mhm.
How does First Hope Bank help? I mean, we talked a little bit about this. We touched on it with kind of helping them understand their credit report and making sure everything is set before they like really apply for a mortgage or get into that process. Um, how does First Hope help people build stronger financial profiles and feel more confident through the whole lending process?
So I think with First Hope Bank and being a community bank, we're kind of looked at more of like I would say we are trusted advisors and not just lenders. We kind of pride ourselves in making sure that our customers feel educated. We have a genuine interest in their long term success of buying a home, and not just even buying a home, like looking at the bank as a whole, um, making sure they're we're getting them in a home, making sure that, they have uh, accounts, checking, savings, wealth management, building investment portfolios. So I would say that as a community bank, we don't just stop with lending and giving you a mortgage. It's building a financial profile for you. And then the other thing I think that I we really pride ourselves on is educating our customers. So I mean,
Hmm.
proof in the pudding here. We're doing a podcast here to talk about credit,
How about that?
to
Yes, that's
yeah,
correct.
to
Absolutely.
educate our customers, and or anybody out there listening that you know
Mm,
how to improve your credit, how to benefit yourselves. The amount of, you know, information we have available on our website to help educate our customers, and then even like webinars that we offer. So I think that's one thing that, or a couple things that really sets us apart as a community bank and helping our community and educating our community on these topics.
excellent. Thank you. So again, wrapping up things here, kind of a nice little bow. Um, Someone wants to take action to improve their credit score or understand their credit report, what have you. What's one for those listening to the podcast? What's one thing they can do today to kind of get started on that path?
Um, I mean, I would say like to get started, like get a copy of your credit report, and then really review it through, match up your credit, making sure everything is accurate, and I mean accurate like your credit, your social security number, date of birth, everything on the report is accurate, and then come and see one of us. One of our mortgage loan officers, bring a copy of your credit report if you have one. If you don't, like we can, help you to go to the website to get a copy of it. And we can then discuss with you next steps of moving on, improving your credit, or building your credit, opening new credit, ways to accomplish that.
Excellent. No, that's great. Thank you.
Yeah.
All right, so let's wrap it up with two things. Um, so we're gonna this will be it. Last two pieces.
Okay.
So that's the one thing they can do today. So just from two last things. What's one thing? What's one mistake you wish people would avoid? And what's one habit you wish everyone would build?
One mistake to avoid, big mistake, um, is not doing anything about your credit. I mean, I think if anything, like
Oh, yes.
just sitting there and not taking action is the worst thing that you can do. So we gave you a lot of tools here today, and um, if you, even just use half of them, you're going to put yourself in a better situation. But I think the most important thing is listening to this or listening to anybody talk about credit and then doing nothing about it. So take the steps, move forward, get a copy of your report, and seek some guidance if you're just not sure. And then for your other question, I would say, um, so like yeah, taking the steps to move forward is like I think the first and foremost. Your other question, repeat again to me.
What's the one habit you wish everyone would build?
Okay, habit. I would say monitoring your credit on a regular basis because again, we really spoke about how your credit changes and evolves over time, and you really never know when something is going to potentially pop up on your credit report that could negatively impact your credit score. um, so it's really just building a habit of being active with it and monitoring it on a regular basis.
So for that, would you say like setting up alerts would be
Setting up alerts. I mean, you can do it like even on your phone or whatever. You can set up like like I said before, you have credit cards that will provide those alerts to you. If you have a credit card, a
uh,
lot of them will offer this a service like that. If you do not, you can
uh-huh.
set yourself your own alert on your phone or computer or whatever to, every 6 months check on your credit, or every year check on your credit. So I think that's one of the biggest things to kind of get you started on moving forward and being financially successful with your credit report.
Excellent. Just like they say, every time you change the clocks, replace the
Your
batteries in your fire alarm, maybe
Yes.
your smoke alarm,
Yep.
maybe the same thing. Every time you change the clock, just go to that credit report and
Yep.
and check it
Yes.
out and make sure
Yeah, every
everything
time you hear
is
that
accurate.
that little fire alarm beep that you have to replace your batteries, go check your credit.
There you go. Well, Stacy, thank you so much for being with us today. I really appreciate your time and your knowledge. That was really wonderful. Um, Thank you, everyone. Thank you, everyone, for listening. We again hope this was valuable to you. If you have questions, you can always go to www.firsthope.bank, and you can start there. You can contact us. You can get print. We are here to help. There's all sorts of information
Yes.
available on our site as well. So check it out and stick around. Make sure you follow our podcast and stick around for the next episode.
All
Thanks so
right.
much.
Thanks so much for having me. Take care.